Yeah, hi everybody. This is Joe Ross, and this week I want to answer a question that came in. Uh, I'm going to read it to you, and then we're going to answer it. The question, or it was a question, but it's really a statement. I believe it would be interesting and useful if you could, in one of your next videos, talk about break-even traders. Traders who are not losing money, but also not making money. At least not enough to grow their account or take consistent profits from their trading. And I thought about this statement that came in, and I realized that what the person needs who's breaking even is confidence. Confidence in what they're doing and confidence in themselves to do it. But because I didn't want to just use my perception and my opinion, I sent the question to all of our traders. I sent it to Andy and Mihai and Francesco and Marco, and waited for their answers. They didn't know what my answer would be, and they didn't know what each other's answer would be. But in essence, they all said the same thing. So really, the question is, how do I get confidence in myself, and how do I get confidence in what I'm doing? My answer to that is, number one, of course, each person is going to be different. It's not something where there's a one-size-fits-all answer. And the person who sent in the question thought that what they needed was some kind of a strategy that would always work. I don't believe that that's the answer. A strategy is not going to do it. A strategy that's even consistent is not going to do it. What's needed is confidence. And the way a person gets that takes a little bit of work on the person's part. They're going to have to sit down somewhere, maybe with a friend, maybe with a counselor, maybe with a minister, maybe with a psychologist, okay, and do some introspection. You need to find out who you are and what makes you tick. You need to find out why it is that you can't get over the hump, that you're just breaking even. You win sometimes, but then you give it back, and then you lose, and then you win, and so forth. You just can't get over the hump. And this is going to take you finding out who you are. You need to find out who you are in the sense of risk. How much risk can you take personally? How much can you handle psychologically, emotionally, even physically? How much risk can you handle? And financially, of course. How much risk can you handle financially? You need to know this. And no one should even begin trading or continue trading without having the answer to that question. And it's really in four parts: emotionally, mentally, or psychologically, financially, and even physically. How much risk can you handle? Because it's not being able to correctly handle risk that causes the person to not be able to get over the hump. I hope you can see that. I think you have to think about it. I think it's an exercise that's very strenuous. It's very personal to each person, but there's something in your life that's causing you to hang up. It's causing you to not progress. It's causing you to not be able to get over the hump. Those people who are break-even traders have the ability to win. They know that. They know what they're doing. They know how to trade. I agree with those thoughts. They know how to trade. They know what they're looking for. They've come up with many, many schemes for making money. They've come up with ways to trade. They've read about ways to trade. They've tried methods and systems. They've tried trading opinion. They've tried not trading opinion. Whatever they've done, it hasn't worked. The barrier is themselves. The barrier is the fact that they really don't believe in what they're doing. They don't believe what they're doing will work consistently, and so it doesn't work consistently. They need self-confidence, and they need confidence in what they're doing, and they need them together so that they know that they can do what it takes to make the money. Again, you must find out your risk tolerance. Who are you and how much can you handle? And when you have the answer to that, then you need to go in the market and match your risk tolerance to the market. Right? You have to find out what is the risk in the market, and you can do that through volatility in different ways, looking at volatility to see what the risk is in the market, and then you need to match your risk tolerance to the amount of risk in the market. That's going to tell you which time frame you should be trading in. That's going to tell you which markets you can trade. And there's one other thing that you have to do. You also have to find out what your objectives are. What do you expect from a trade? And what do you expect from trading overall? What is trading supposed to do for you in your life? And what should it do for you in this particular trade? And you need to match that with the possibility of making your objective in the market you're trading. If you want to make $1,000 on a one lot, you're not going to make it very easily on a 1 minute chart. You need to go to a chart that's volatile enough that within a reasonable amount of time, you can make $1,000. And we see traders not doing the right thing all the time. That's it for this week. It's something for you to think about. Self-introspection, find out who you are. Find out what your objectives are. Find out what your risk tolerance is. And then build your self-confidence. Until next time, I wish you all the best all the time.